Good morning, everyone. My name is Shailesh Kumar. I am working as a tax director with PKF, and I have my colleagues Mradul and Megha with me. At the outset, we welcome you all to this webinar on the recent amendments to the VAT decree law, which have been introduced by the UAE government. These significant government amendments have come after a period of 5 years, and some of these amendments are going to have some far-reaching impact for the businesses, while some other amendments are just clarificatory in nature, which were already there either in the executive regulation or in the tax procedure law, but now they are forming part of the VAT decree law. So to make the law much more comprehensive, much more clear, we believe that these amendments are very important, and at the same time, it may have some, impact for the businesses also. Uh, these The objective of taking up this webinar is to brief you and to explain you on these amendments. For this purpose, we have categorized these amendments into five, six broad categories. First and most important, which is the insertion of statute of limitation for the tax audits and other aspects. And then there is valuation of deemed supply in case of related parties, place of supply, in case of continuous supply of goods, transport related services, zero rating of certain imports and documentation related to the import. So all these provisions, my colleagues Mradul and Megha will take, and at end of this webinar, we will also be happy to take up questions from you, and we request you all to type the question in the chat box, and we will take them one by one. So we hope you find this webinar useful. Over to you, Mridul.
Well, thank you, Shailesh, for the introduction. Very good morning to everyone. It's been a lovely morning out there, the month of November. The weather outside seems to be getting better, and so is the much needed clarity on few aspects of the UAE VAT law. So we'll proceed with the points one by one. So the first point is on the time limits. Now, this provision is something which is newly inserted in the UAE VAT decree law. The first point in respect of the conduct of tax audit or tax assessment, which was previously there in the tax procedures law, stands intact. That the overall time limit for the FTA to conduct a VAT audit would be at 5 years from the end of relevant tax period. Now, what is newly inserted here is the second point. So if at all any business registrant receives any notification towards initiation of audit in the 5th year of the introduction of UAE VAT law, the FTA would now have further 4 years from the date of such notification to conduct and complete the audit. Now, this really reflects the impetus the further impetus which FTA would now be giving towards enforcement of the UAE VAT law. The third point is in respect of submission of voluntary disclosure. So if a business happens to submit a VD in the 5th year of the introduction of UAE VAT law, in that case, the FTA would have time limit of 1 year from the date of submission of such voluntary disclosure. So if you compare the second and the third point, if a business happens to submit a VD, the FTA would have just 1 year to conduct an audit, whereas in any other case, it would have 5 years. If the notification is sent in the 5th year, then they will have further 4 years. The fourth point is on tax evasion. So this provision was earlier specified in the tax procedure law, wherein the FTA would have 15 years from the end of the relevant tax period to conduct an audit. The last point is on tax registration failure. So earlier, there was no specific provision towards what would happen in a case where a business who was supposed to be registered in under the UAE VAT law, but is not registered, and therefore the non-compliance of it would be something in what way that could be taken up by FTA. So now they have specified that even in these cases, the FTA would have 15 years from the date on which that particularly taxable person was required to be registered. Another thing added here in this provision is that a registrant can only submit VD till 5 years from the end of the relevant tax period, which entails that no VD could be submitted beyond 5 years. So if you closely examine the provision, if FTA happens to send a notification for audit uh, in the fifth year, which is this year in particular, and no VD is submitted to that extent. In that case, the overall time period, the businesses would still be subject to VAT audit. However, they would not be in a position to submit voluntary disclosure beyond 5 years of the relevant tax period. Moving ahead, the next amendment is in respect of time limit to raise tax invoices, even in case of continuous supply of goods or services. Previously, the 14-day time limit to raise a tax invoice was only there in general cases. Now the same has been extended even to continuous supply of goods or services. So let us just examine as to how this time limit would shape up in respect of each of the date of supply dates, which is specified under Article 26. So there are 4 instances which could lead to a date of supply in such scenarios. The first one is date of issuance of tax invoices. So considering that the invoice would already be raised, therefore the time limit of 14 days would not be applicable here. Second one, due date of payment specified on the tax invoice. Again, since the tax invoice would already be raised, it would not be applicable here. Third one is date of receipt of payment. In this case, the time limit would be 14 days from the date of receipt of payment. So the businesses must ensure that they correctly document the exact date of receipt of payment, since now you will be required to raise a tax invoice within the specified time limit. The last one is date of expiration of 1 year from the date when goods or services were provided. So this is the overall period, the maximum time limit wherein a business would require to raise a tax invoice. So in this case, it would be 12 months plus 14 days from the date of goods or services were provided. The same criteria has also been extended towards raising of tax credit note. So now a tax credit note would also be required to be raised within 14 days from the date on which there is an occurrence of an instance which leads towards raising of such tax credit note. Moving ahead, valuation of deemed supply between related parties. So this again has been a new type of provision. Earlier, there was no clear-cut mechanism in respect of how the valuation would be for a transaction value in respect of transactions undertaken between two related parties. Now, it has been clearly specified that any transaction undertaken between related parties would be valued at the market value of the said transaction. So accordingly, to that extent, the valuation of deemed supply would also be undertaken at a market value. So the governing conditions which has been spelled out under Article 36. Article 36 is also having an overriding effect on Article 37, which earlier stated that the valuation of deemed supply would be at cost price. So under Article 36, it states that the two conditions which needs to be satisfied for a transaction value to be categorized as a deemed supply is that the value of supply is less than the market price and the recipient does not have full right to recover the input VAT. So if these two conditions are met, a particular transaction would be subject to deemed supply provisions. Moving ahead. So place of supply in case of continuous supply of goods or services. Now, specifically, the place of supply in case of continuous supply of goods was not specified anywhere. So considering it was not specified clearly, the general place of supply rules would have governed. But now we have a clear insertion under Article 27 towards towards identifying what would be the place of supply in case of continuous supply of goods. So it is stated now in the amendment that if ownership of goods is transferred inside UAE, the place of supply would be UAE. So if you happen to see the export and import scenario in case of continuous supply of goods, the overall taxability from UAE VAT perspective may not change, considering that the export conditions still remain the same towards export of goods, as well as the import of goods conditions, the reverse charge mechanism conditions, the supplies made by non-recipient, the supplies made by non-resident supplier towards reverse charge mechanism transactions still remains the same. So overall, there would not be any change in the interpretation that comes out towards from this amendment. Second one is place of supply in case of transport related services. So the place of supply for transport related services was earlier spelled out in the UAVT regulations. The same has now been extended even in the UAVT decree law, and therefore the two are now aligned with each other. So it states that the place of supply in case of transport related services would be the place where the transportation starts. So in case if the service provider and the service receiver are in UAE, however, the related activity would have been conducted at a port outside UAE from where the transportation would start. In that case, the place of supply would be outside UAE, and on that basis, the taxability could be that it would be out of scope in nature. Moving ahead, zero rating of certain import and documentation relating to import. Again, zero rating of certain imports. This was earlier already specified in the UAE regulations, or rather, zero rating somewhere down the line was always specified in case of each of the transactions which has been specified here. However, when it comes to clearly identifying the same in the UAE decree law, they have brought in these changes through amendment and now clearly stated that these 5 transactions would now be subject to VAT at zero rate. So air, sea, and land means of transport for transportation of passengers and goods, concerned goods related to the supply of means of transport and which are designated for the operation, repair, maintenance, or conversion of these means of transport, air or sea rescue and assistance aircrafts or vessels, crude oil and natural gas, and concerned related goods in context to preventive and basic healthcare services. These would now be categorized as zero rated. Moving ahead, documentation in relation to import. The documentation that would be required to categorize a transaction as import and correspondingly to be able to recover input VAT of VAT charged under reverse charge mechanism was already specified under the UAE VAT regulations, which now have been extended in the UAE VAT decree law, which further instills that having these documents by an importer is of essence here, and which also again reinstates the importance of having these documents as part of record keeping by the businesses. So in case of import of goods, documents required would include invoice and import documents. import documents could extend to the bill of entry, the bill of lading, that ideally forms part of the overall record keeping. In case of import of services, the invoice received by the foreign supplier. This again is a key amendment which has been brought in. So earlier, in case of registration exception, so any supplier who would be making only zero rated supplies were granted an exception from registration upon making an application of the same to the FTA. However, through this amendment, it has been brought in that even a VAT registrant could apply for an exception from VAT registration if it would be no longer making any taxable supplies other than zero rated supplies. So going forward, any VAT registrant, if their businesses would have changed in such a way that they would only be making zero rated supplies, they can always apply for an exception from VAT registration. Changes in deregistration. Earlier, only a VAT registered person can apply for tax registration. Now, through the amended provision, they have stated that FTA can very well deregister a registrant if their registration would be something that would be prejudicial to the safety of the tax system. This does not impact the FTA's right to recover any tax dues or administrative penalties. My colleague, Ms. Megha, would take over from here. Over to you, Megha.
Hello, everyone. I would like to continue the discussion ahead, which has been done by Mridul. Mridul, can you move to next slide? Yeah. So the next amendment relates to recovery of input VAT by government entities and charities. Government entities and charities, as listed in the cabinet decision, can avail input VAT for activities undertaken for sovereign activities by government entities and for activities undertaken for relevant charitable activity by charities. So sovereign activities undertaken under sovereign activities had already been defined under UAE VAT decree law. However, this relevant charitable activity definition has been newly inserted by FTA in the Article 1 of UAE VAT decree law. Earlier, there was no specific mention. The Article 57 had stated that government entities and charities can avail input VAT apart from what is stated in the executive regulation and input VAT attributable to exempt supplies. So now the amended provision has given specific activities for which only for which government entities and charities can avail input VAT. However, the exclusions which are as the non-recoverable input as mentioned in the executive regulation and the input VAT attributable to only exempt supplies is still not allowed to be recovered by the government entities and charities. Next slide. Further, we would like to discuss on the other key amendments, which are relating to out-of-scope supplies, place of residence of principal, domestic reverse charge on hydrocarbons, instances to raise tax credit notes, amount recovered as tax, and insertions of certain definitions by FTA. So the first one relates to out-of-scope supplies. Earlier, only sale or issue of voucher and transfer of going concern business was included as out-of-scope supplies by FTA in Article 7. However, now they have inserted any other category which would be specified in the executive regulations. So, but as we see, the specific mention, corresponding mention of the other category has not been specified in the executive regulations currently. However, in future, the amendment in terms of this other category specification is expected, can be expected in the executive regulations. By this amendment, government, FTA basically in future can include certain category of transactions which would be out of scope in the executive regulations without amending the VAT decree law. The next one relates to place of residence of principal. The place of residence of principal would be determined on the basis of the place of residence of its agent, which means that the permanent establishment and the fixed establishment of the agent would be the permanent establishment and fixed establishment of the principal for the purposes of determining taxability in terms of UAE VAT law. The words have been rephrased to provide more clarity and affirm the provisions of Article 33. In our view, there has been no technical change, no change in technical interpretation of the same. The next one relates to domestic reverse charge on hydrocarbons. Earlier, there was an ambiguity in terms of identifying the exact nature of hydrocarbons, which would be taxable under reverse charge in the VAT. The FTA has now defined pure hydrocarbons, which states that any of the various pure compounds of the chemical formula consisting solely only for hydrogen and carbon. So this ambiguity has been removed, and from any hydrocarbons, they have stated pure hydrocarbons and which have been defined in the Article 1. So now with the amended law, only pure hydrocarbons would be subject to VAT under reverse charge, and the amended law brings more clarity on this aspect. The next amendment relates to instances for which a tax credit note can be raised. Article 61(1) states about instances for which output tax adjustment can be done by businesses by raising a tax credit note. One of the instances which was included was tax charged in error. This instance has been further modified if any tax charge in error or if any tax treatment is applied in error. By tax treatment, it can be meant that if any incorrect classification has been done by businesses in terms of classifying their supplies as standard rated, zero rated, out of scope supplies, or exempt supplies. In general interpretation, incorrect classification would be covered as part of tax charged in error. However, FTA has given more clarity on this aspect by exclusively including if any tax treatment was applied in error. So businesses can raise tax credit notes and can adjust their output VAT for if any tax was charged in error or any tax treatment is applied in error. The next amendment relates to amount recovered as tax. So if any amount is received as tax or a tax invoice is issued, the amount which is specified on the tax invoice or any amount received as tax shall be remitted to FTA, and that shall be treated as tax due. Earlier, there was no specified document which was specified by the FTA. It used to mention like tax pursuant to any document to be paid to FTA, even if it is not due. So government has provided more clarity on the same. The further amendment relates to insertion of definitions. There are few of the definitions has been included by FTA in terms of Article 1, which states first one relates to relevant charitable activity. As we discussed earlier, relevant charitable input VAT by charities which are listed in the cabinet decision can avail input VAT only for activities which has been undertaken for their relevant charitable activity. This definition has been defined as the activity for the purposes which is other than for profit or benefit to any proprietor, member or shareholder of the charity, which is undertaken by the charity in the course or furtherance of its charitable purposes, or objectives to carry out a charitable activity in the state as approved by the competent authorities or under the conditions of its establishment as a charity under federal or emirate legislation, decree or decision, or as otherwise licensed to conduct a charitable activity by an entity that grants such licenses on behalf of the federal or emirate government. So the purpose of bringing out this definition in the Article 1 of VAT, UAE VAT decree law, because input VAT by charities can be availed only for activities undertaken for relevant charitable activities. The next definition inserted is on pure hydrocarbons. As we discussed earlier, there was an ambiguity in terms of uh, uh, exact nature of hydrocarbons on which tax was applicable under reverse charge. So this has been brought out to bring the clarity and mentioning specific hydrocarbons on which tax would be applicable under reverse charge. The next definition which has been included are tax evasion, tax audit, tax assessment, voluntary disclosure, and tax procedures law. This has been included on account of bringing out the new insertion of new article on statute of limitation, which has already been discussed earlier. I would like now Sailesh to take up on Q&A.
Thanks, Mridul. Thanks, Mega, for the presentation, and I hope that the audience here will have more clarity on the amendments which have been brought in form of amendments to the VAT decree law. So I have a few questions for you. So we'll start with a slightly easier one, and then we'll go to a bit more complicated ones because this is going to have some questions. So first, so there is a word term BIS included as part of the new Article 79, which is introduced and which introduces the period of limitation in the decree law. So why? Because we do not find this word BIS in any other article. So can you explain what is the meaning of this BIS in section, then this Article 79? Mridul, I think you are on mute.
My apologies. So we did a small Google search for the same, and we happened to find out that the term BIS is used in legal statute whenever there is a repetition of the article reference, insertion of a new article between the two. So if you carefully see under the UAE VAT decree law, there is already an article number 79, and now this has been an addition to the same. So there are now two Article 79, the latest one with BIS in bracket.
Okay, great. So one question regarding, and this is one of the concern areas for extending the time limit for doing the tax audit by the FTA, because earlier as per the tax procedure law, it was supposed to be conducted within 5 years from the date of your filing your tax period, within 5 years of a tax period. So now they have made some significant changes to the period of limitation for doing the tax audit, FTA audit. So my question to you is, since time limit to complete tax audit has been extended by the FTA and businesses are expect to receive the notices from the FTA now, because of the new time limit of 4 years within which the from the date when FTA issues the notice, how businesses can prepare themselves?
So now it is of utmost important that, considering this extension of time limit to conduct enforcement, it is of utmost importance that businesses must review their existing VAT processes, the tax positions that they have adopted in the past, review the same, file a VD as soon as possible if you are supposed to, in order to rectify the same and be compliant. Because going ahead, we might see a lot of enforcements from FTA.
Okay. So one question is, if VD is filed in the fifth year by a registered person and FTA also issues notice for conducting the tax audit in the fifth year, what would be the time limit to complete the tax audit by FTA? Because we see some conflict whether the extended period of 4 year will apply or 1 year will apply. So just give us some more clarity on that.
Right. So they have specified that only in instances, only for a tax period for which a VD is submitted, and that too only in the fifth year. So VD has to be submitted in the fifth year. So only for that specific aspect, the time limit to conduct an audit remains 1 year from the date of submission of VD. In respect of VD submitted in, let's say, in the first year of introduction of VAT law, second, third, or fourth, they have not specified anything. So from that perspective, it appears that if the notice is issued in the fifth year of the introduction of VAT law, in that case, they will have an additional time limit of 4 years from the date of receiving this notice. So that categorization is something that we would need to make and understand clearly.
Okay. So I have another question, and the same question has been asked by our audience, Mr. Sanjay Kapoor also. Could you please share an example on valuation of deemed supply between related party for more clarity on the amendment? So basically, what could be a market value in terms of valuation of deemed supply in case of related party? And can you give some example on that?
Right. So now, how do we determine the market value is something which is not specified anywhere in the UAE VAT law. The UAE VAT law does speak about valuation of consideration, but valuation of market value is not specified anywhere. So we see, or rather we foresee, that this could well be a precursor to the upcoming corporate tax and the transfer pricing regulations, wherein there would be clearly spelled out provisions governing how to compute the transaction value, which would be at arm's length between two related parties.
Okay, great. That is interesting. Interlinkage between the VAT law and the corporate tax and transfer pricing provision also. That sounds interesting. We have another question that if something is procured for free of cost and sold below the market value to a related party, how valuation of such supplies will be carried out?
So considering that the procurement of such supplies happened at zero value without any cost with at FOC, the transaction will not fall under the deemed supply provisions.
Okay. We have a question from Mr. Dilip. It reads, can you please provide more clarity on tax credit notes? Currently, we are issuing a tax invoice to export customers and charge them VAT. Once the customer provides the export document, we then pass a tax credit note. However, the customer might provide this export document after more than 25 to 30 days of the original supply. Can we still raise a tax credit note towards this tax invoice once the export document is received?
So I believe that this in the earlier instance, they might be collecting VAT, and only upon receiving the export documents, they would be raising a tax credit note in order to refund VAT back to them. So again, change in tax rate is a specified instance for which you can raise a tax credit note, possibly so that receipt of export documents could be considered as the date on which, as the relevant date for the purpose of issuing a correcting document, which is a tax credit note. So that tax credit note would be required to be raised within 14 days from the receipt of these export documents.
Great. We have a question from Ms. Gianna Ms. Ramchandani. We are into service organization where our scope is supply of goods and installation. The question is where we can raise the tax invoice since our scope is still installation. Many times the work cannot be completed in 14 days. So shall we invoice after the work completion?
Yeah, so if possibly you can add a clause in the agreement, what happens to be the milestone date wherein you can say that a portion of the work is complete or full work is complete. So from that milestone date, you need to raise invoice within 14 days.
Okay. There is a question from Ms. Mugdha. Please share information about VAT treatment on charges deducted on ULIP plan of life insurer company, whether VAT is deducted on admin charges, etc. I think we'll need more facts on this transaction to advise or to give our view on VAT applicability. So we can take this offline, and we request Ms. Mugdha to contact us through email or phone. So we'll be happy to advise you on that. There is another question from Mr. Anas. Is the supply like sale of parts to abroad is can be treated as zero rated? Sale of parts to abroad.
I would still believe that we would need more clarity on the facts. However, if you have the export documents in place and it happens to be a proper export from from UAE to outside UAE, zero rating could be an acceptable view.
Mhm. Okay. We have another question from Mr. Sanjay Kapoor. On amendment of documentation related to import, Article 55, is the invoice date from foreign supplier relevant, or it is the date of receipt to be considered? For example, for import of goods or service, supplier raised an invoice in January 2022 and we receive it after 1 year. Can we claim VAT after 1 year under RCM? If input under RCM is not claimed in the return period when the invoice is received, can it be claimed in the subsequent return period?
So this is import of goods or import of services?
Uh, this says import of goods slash services, so it's not clear whether it is
Yeah,
import of
because
goods or service.
in respect of import of goods, generally the auto population happen in the VAT return under box number 6. So technically, you are supposed to recover the input VAT within 2 tax periods, the same and the subsequent one. In respect of import of services as well, upon receiving the invoice, you need to have the output VAT calculation in the VAT return and take the input VAT in the same or the subsequent tax period.
Okay. We have a question from Ms. Manisha Taliani. Transfer of goods between entities under the same VAT group can be whether it can be considered as non-VAT transaction, and related party rules does not apply on these transactions. So entities within the same VAT group basically.
Yeah, so now this insertion in article number 36 does not specify or does not give a non-obstant treatment to VAT group deregistration. So considering that aspect, the transactions between two related parties, part of the same tax group, would still be disregarded
Okay.
for that purposes.
Yeah. So another question from Ms. Gianna. We are into service organization where our supply. I think this is the same question. I think we have already done it. Uh, we are into service organization whether where our scope is supply of goods and installation. The question is where we can raise the tax invoice. Since the scope is still installation, many times the work cannot be. We have already done that. Yeah. There is a question from Mr. Rana Abrar Ahmed. For continuous supply, does the period of 12 months plus 14 days to issue a tax invoice starts from the first day of provision of service or last day of service provision?
So if you carefully read article number 26, there are four events. Whichever comes earlier is the time when you have to raise invoice within 14 days of that event. So a period of 12 months happened to be the last possible occurring event. If nothing of the earlier three instances appear, in that case, you need to raise invoice within 12 months. So now with the additional time limit of 14 days, it could well be said that you have 12 months plus 14 days to raise a tax invoice in case of continuous supply of service.
Yeah, but the question is where this 12-month period will start. It will be whether it is first day of provision of service or last day of provision of service. I think it is first day
The
of
first,
provision of
the first
first
day.
day. Yeah, first day of provision of service. Because after last day, your service is anyway complete and you have to raise an invoice. So 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 I also believe that it should be first day of service. Uh, then another question from Ms. Gianna. Many times customer requires the current dated invoice. Yeah, this is interesting. We see so many instances. In that case, we pass credit note and raise another invoice. So the treatment for VAT will be zero. Can we pass and give credit note?
Right. So this has been a very common phenomena. We have been getting a lot of inquiries, questions on this aspect. We must carefully understand that merely for the purpose of receiving a current dated invoice, this event is not spelt out um, uh, as a qualifying reason for a business to be raising a tax credit note. So ideally, a supplier should be raising invoice within 14 days of the completion of its supply. For a person who is receiving the services, from their perspective, they can recover input VAT. They can possibly recover the eligible input VAT upon meeting two conditions. One is the receipt. One is documenting the receipt date of invoice, and second one is the intention formation date. So when these two dates are documented, they can they can recover input VAT either in the same tax period or in the subsequent tax period. So they are not supposed to rely on the invoice date for that matter. It is the receipt date which is of relevance to them. So the customers from that perspective should not be calling for a revised tax invoice merely for the reason of having a current dated one.
So you can always mention to the customers, advise to the customer that they can simply treat the receipt date as when they consider. Uh, this is tricky actually, because
Possibly document the email date if they are
yeah,
receiving soft copy as the receipt date of invoice or the
yeah.
date on which they actually receive the invoice.
Yeah, this is tricky because sometimes the email is gone to the customers, but they don't bother to look at it, and this invoice is kept pending for long, and then they ask for a revised invoice. This indeed is a tricky situation, Vidul. Uh, I mean, you have to sometimes look for the practical solution as well as what is written in the law. So while we know law is very clear on that, but how it marries with the practical situation is something to watch out. Yeah. We have one question from Mr. Irfan. We being a designated zone FZ Co, having been making out of scope supplies along with related party billings outside UAE with zero rated selling and admin expenses. We always have recoverable VAT position. Do you think this may impact our registration?
Okay, so are they already VAT
I
registered? Okay.
Probably yes, and I think the question is directed towards the specific power now given to the FTA, where FTA can also deregister a taxpayer where they feel that it is prejudicial to the interest of FTA to keep that person as a registered entity. So we'll have to,
So the reasoning for the same is something which has not been specified. However, see, the only point of difference between a business opting for an exception from VAT registration from if they are making only zero rated supplies, uh, vis-a-vis having a VAT registration with having only making zero rated supplies is that when you opt for exception from registration, you also lose out on the eligible input VAT which you could claim from the FTA. Which can only happen if you are registered and reporting the zero rated supplies as well as recovering input VAT while being registered. So this is
yeah.
the difference that.
No, I think the question is that only they may be making the zero rated supply, but still they would want to recover the VAT on the input
Yeah,
selling and admin expenses.
which can only happen if they are registered with FTA. It cannot happen if they apply for exception from registration.
Right. So I hope we have answered you, Mr. Irfan. In case you need further clarification, you can reach out to us. We have a question from Mr. Ashwath. Please provide more clarity on place of supply, companies operating inside Zavza and supply to mainland.
We would need more facts on this.
Okay, so again, requesting Mr. Ashwath to to provide more details on the facts. We are reachable on phone or email. We will be happy to advise you. We have a question from Mr. Senthil Murugan. Good morning. In the case of deregistration of one entity from tax group, is it need to submit the data, which is the turnover detail or return details for deregistration and deregistering entity, or tax return details for the full group?
Yes, when you are submitting the deregistration details, you are supposed to provide the turnover details as well
For the entire group.
for the entire group.
Okay, perfect. Oh, another question is from Ms. Gianna Ramchandani. Many times customer requires the current dated invoice. Yeah, in that case, we pass the, it's the same thing we have already discussed. Uh, yeah, another question from Ms. Manisha. Timeline for issuance of invoice in case of supply of goods will be 12 months plus 14 days from date of expiration of 1 year. Yeah, I think from this, but this will be in case of continuous supply, right?
Continuous supply only.
Yeah.
Yes.
So we request Ms. Manisha to again to get back with more specific details, facts. We'll be happy to advise you on that. We have a question from Mr. Ashwini. We have not received any notice for audit from FTA since inception. Is it possible that some companies may be exempted from FTA audit? Yeah, I mean, if you're lucky, and we hope that we don't get an FTA audit.
Yes. So in case if you have not received, possibly so that you are generally doing a compliant filing of VAT return,
Yeah.
or you never know. I mean, if you may, because you still have 2 months left.
Probably, I think the FTA will also be using some technology data matrix to identify the cases or to select the cases. I'm just this is my thought process for a random selection. So there must be some IT technique to select the cases and then send the notices.
Absolutely.
We have another question from Mr. Prakash. We have registered as a group company. I believe it should be they're talking about a tax group. We have sales revenue for all the companies except one company. Shall we deregister for that particular company?
Right. So the law specifies that the member entities of the group should be having turnover above the mandatory limit once it enters the tax group. Once it is supposed to be added as part of tax group. However, the law is silent when it comes to deregistering the member entity um, as to what turnover has to be seen, whether the turnover below, if it falls below mandatory or if it falls below voluntary limit. So we believe that you can apply to take that member entity out of the tax group upon their turnover falling below the mandatory threshold.
Another question from Mr. Ashwath. Zero rated supply, transportation of goods and passengers. Suppose the suppliers are submitting with VAT, then should we reject it?
So this is international transportation or zero rate or local transportation. If it's international transportation of passengers and goods, it is clearly zero rated as per Article 33 of the regulations. And local passenger transportation services is exempt in nature.
Okay. So we'll need to see the nature of transportation and the entire transaction in detail to give more specific comments on the same. Another question from Mr. Rana Abrar Ahmed. Does the new provision of deemed supply for related parties apply to all kinds of supply of goods and services or only for deemed supply? Is this provision applicable for transactions with a foreign related party?
So for related parties, deemed supply, in respect of deemed supply, so deemed supply is a concept. Under that, if you're doing transaction between two related parties, they say that the transaction should be at market value. If you see the valuation rules, uh, the definition of consideration that also states that they have referred to the term market value. So it should be always that the transaction value should be at market value when it comes to even transacting with related parties.
Including a foreign related party or a domestic related party.
Absolutely.
So not applicable only for a foreign party only. Uh, we have a question from Mr. Manoj. If we have not received notification from FTA within 5 years time for VAT audit, still we have to keep records for how many years?
So it is advisable to keep the records till 15 years because although you have a provision of tax evasion wherein it stated that the audit can be conducted up to 15 years. However, tax evasion cases are generally taken up only if they have strong reasons to believe that there is a possibility of tax evasion done by a registrant.
Yeah,
However, to be on a
yeah,
safe side, you can keep it for 15 years. You
yeah,
must.
and probably there must be some evidence which the FTA might have gathered or some complaint for tax evasion. Then only these cases will apply. In normal cases, it should not apply. But yeah, you're right that it is advisable to keep the records at least for 15 years. And if not physical records, then at least the electronic record should be available. Then we have Mr. Samshuddin. A tax credit note should be within 14 days of the activity. We are into sales of consumer goods. If sometimes too it's challenging to get the items from market within 14 days. Okay, so I think basically they are talking about sales returns. So where they are into sales of consumer goods and the consumer returns the goods after 14 days. What will be the time limit for issuing the tax credit note in that case?
Right.
If I understand the question correctly.
Yeah. So while when it comes to date of supply of goods, they refer to they refer to a situation that when the goods are delivered to the customers. So
Mhm.
likewise, an interpretation could be taken up that when it comes to sales return, uh, only upon receipt of those return goods have occurred to the supplier, that could be considered as the date of return of goods, and upon from that date you can raise a tax credit note within 14 days.
That's great. So irrespective of when you receive the return goods, your time limit for 14 days starts only once you receive the return goods.
That could possibly seen as one of the view.
Yeah. Okay. We have a question from Mr. Sunil Kumar. If we are getting product as FOC by charging only VAT and we are issuing the same product FOC, whether we have to collect VAT output or we can claim VAT input.
Okay, so
So,
the deemed supply thing doesn't work here. Both are at FOC. That means you would have not paid any VAT or would have not been charged any VAT to recover input VAT.
no, but they are mentioning in their question that if we are getting product FOC by only charging VAT, but I'm curious to know that if the product is they have received the product FOC, then on what value the VAT will be charged?
Right. So when you say FOC and you are charging VAT on it, the product cannot be at FOC. What you are charging as VAT, that could be considered as a consideration. And
Okay.
when it comes to consideration, that means the amount includes VAT. One may not be able to allocate an amount specifically for VAT. So
Mm-hmm.
if let's say you 100 is the product value, 5 is the VAT amount. You don't charge 100 to the customer, you only charge 5. So 5
Mm-hmm.
becomes the transaction value and not an amount of VAT. So 5 would include VAT. You need to back calculate, compute VAT and pay to the FTA.
Okay. Uh, we have another question from Mr. Anas. We are repair service organization. We are doing some replacement of parts on behalf of our abroad customers, and we are billing it to them with zero rated. Is it a correct practice? And again, we are doing some replacement of parts under warranty claim on behalf of our abroad customers and are billing to them with zero rated. Is it a correct practice?
So uh, uh, if I have to just give you an answer basis the limited facts, and if this happens to be the relevant specific place of supply rule. So when it comes to services in relation to performance of services on a specific goods, the place of supply is where the goods are located. So if the goods are located outside UAE and you happen to perform any repair or maintenance activity on it, then in that case, the place of supply is outside UAE and therefore it will be not be subject to VAT.
No, but in this case, the facts seem to be different because they are saying they are doing replacement of parts on our on behalf of our abroad customers. So it is not clear whether the replacement or repair is happening in UAE land, or it's not clear whether they are going abroad to do the replacement and repair, or the customer is sending the goods here within the UAE for doing the replacement and repair. So I think we'll need
Correct.
to
It
get into
also depends.
more details of facts
It will
to.
also depend from where the sourcing of the goods is happening, whether
Yeah,
it is happening from UAE or it is happening from outside UAE, and for what purposes these goods would be moving. Whether it is sold to them first or it is the property in goods is transferred to them as part of the maintenance activity which they are doing. We need to carefully read the agreement, understand the terms
yeah,
and conditions, and then determine the VAT.
yeah, agree. One question from Mr. Manoj. Please explain what is that contract between two parties? Not clear. We are not clear on what question is. Then another question from Mr. Vijay. If 100% export-oriented unit receives some minor income from services, whether the same is eligible for deregistration. 100% export-oriented unit receives minor income from services.
I think what he's trying to say is that they are making 100% exports. However, some of their supplies would be standard rated in nature. In
Mhm.
that case, yes, you would lose out on the exception of registration that you have taken from FTA.
So that is applicable only for 100% zero rating
Absolutely.
cases. We have a question from Mr. Ram Anant. We are from the insurance broking industry, wherein we have self-billing agreements with most insurers. When there is a delay, sometimes more than 14 days, in the insurers raising a broking invoice and sending this document to the broker for recording this invoice, can we evidence the receipt date of this invoice and record in our system?
So this thing works out. There are specific guidelines towards an invoice raised by a buyer thing. So in this instances, both the parties agree that the buyer will be raising invoice on behalf of supplier, and the buyer would need to comply to the same conditions which a supplier would have complied with in respect of raising of the tax invoices. So a tax invoice would still be required to be raised within 14 days by the buyer themselves on behalf of supplier.
Mhm. Okay. We have one question from Mr. Rao Sanwar Ali. In case of an acquisition that was done last year, and the contract for that was between a seller and main group Holdco. Later on, Holdco obtained new license for that acquired entity and replace it with acquired entity name A. How can Holdco B transfer asset to new entity through the contract or by raising an invoice? I think we'll need to examine this. This appears to be case of a business transfer and all. So we'll need to examine this transaction in more detail, and then we can comment on that. So we request Mr. Sanawar Ali to contact us, and we will be happy to advise you on that. Again, Mr. Sanjay Kapoor, in reference to my above query on input VAT on import of services under RCM, if input VAT is not claimed or missed to claim in the tax period in which invoice from foreign supplier is received, is there time limit to claim such input VAT in subsequent tax return period, or it can be claimed in any future tax return period.
So again, in respect of input VAT, which a business can recover for reverse charge transactions, nothing specifically has been specified. Therefore, we believe that the conditions which remains for a normal input tax recovery would be extended even in case of reverse charge transactions, and therefore the same period or the immediately subsequent tax period is the date by which you need to recover the input VAT.
Mr. Saklain has a question. Keeping in view the corporate tax arrival, we have two companies. One is designated and one in mainland registered under one VAT registration. Do you think before arrival of corporate tax, we would require to re-register separately for both companies? In my view, there is no linkage between the VAT registration and corporate tax grouping. VAT grouping and corporate tax grouping both have separate conditions. As of now, it seems until we'll definitely have to wait for the final corporate tax law. But as so far as it appears on basis of PCD and the current provisions that you can still continue with your old VAT group. Whereas for the purpose of corporate tax, you will need to take separate registrations for the designated free zone entity and the mainland. You will need to maintain the separate books of accounts and all those things. So corporate tax will go separate vis-a-vis the VAT group registration is our view, I think. Then do we have questions in? We have question from Ms. Gianna Ramchandani. Many times we have receiving copies of copy of the invoice from customers, but still they would require the current dated invoices as the invoice might not reach to accounts, and they are require. I think we have already discussed. Yeah, we have already answered this question. Client outside. You have a question from Mr. Yadagiri Srikonda. Client outside UAE deduct withholding tax, can we claim for refund from FTA? Also, we pay VAT, KSA VAT 15%. Can that be claimed as refund from FTA? If yes, then what all procedure need to be done? This is, I think, from a corporate tax perspective. If your client outside UAE deducts the withholding tax and even they charge the KSA VAT. First of all, KSA VAT will be an expense, and there is no provision whereby you can claim a credit of tax VAT paid in the KSA against your VAT liability in the UAE. So both are completely separate. So that is a cost for you. But so far as withholding tax is concerned, you can definitely, if you are subject to corporate tax in UAE also, you can definitely claim a credit for tax paid or withholding tax paid in the KSA against your corporate tax liability in the UAE. We will need to see what all formula or what all provisions are there for the tax credit for computing the amount of foreign tax credit. So in principally, yes, foreign tax credit will be allowed. How this foreign tax credit will be calculated, to what percentage proportion you will get a benefit, we'll need to see the final corporate tax law and regulations for that.
Also, I would like to add here that when it comes to claiming refund of KSA VAT, so you would appreciate that the provisions of implementing states have not been activated till now. It's been almost 5 years, but it has not been activated. So once those provisions becomes relevant, you may not be seeing this scenario possibly.
Yeah. So once this implementing states provision is introduced and the entire GCC is seen as one country or one regime as such, then probably this leakage may be reduced and the businesses may be able to claim a credit of VAT paid in one country against VAT paid in other country. VAT liability in the other country. But as of now, that framework is not operational. So this cost remains. This another question from Mr. Ajay Kumar, whether providing extended credit period by a Zabza company on interest basis on trade receivable from foreign parent company is to be considered outside VAT scope as passive interest.
Uh, this is
So
extended credit period.
yeah,
So any interest on loans and advances extended to a business is an exempt supply. However, we would like to see the additional facts in terms of how, whether the interest parameters should also be such uh, that it's a nominal interest, which usually the banks would charge you in extending a credit. If a significantly higher interest is charged so as to compensate uh, for the liquidity of the business and for the rolling of the stock of the business. In that case, there could be a possible view that it is an additional consideration towards the supplies made by the supplier. So we need to see the fine print of the
yeah, we need to see the contract basically on what basis this interest is arising. Uh, Then we have a question from Mr. Anas. Tax credit note is claimed by the customer after 2-3 months. Is it okay to issue tax credit note basis the claim of the claim date rather than date of supply? I mean, we are not clear here why this credit note is being claimed.
yeah,
Yeah, so we need to see the
yeah,
more details
not
on that.
clear with the question.
Yeah. We have another question from Mr. Ajay Kumar. We are a free zone company providing outside from and to UAE transportation of goods for which we are filing a return with zero rated value. Should we apply for deregistration? Your recommendation, please.
So if it is only towards the international transportation and you're only making zero rated supplies, in that case, you can apply for exception from registration. Basically, it should be exception.
Yeah. So basically, possible.
Yeah,
I think. Yeah.
yeah.
We have a question from Ms. Vimi. We are in project division. Few items are under 2 warranty. In case we have to replace the item after 1 year FOC, can we claim the input VAT for the item purchased uh, from our end?
Not clear with the question.
Not clear. I'm not.
However, any supplies that you make within warranty period, which is at FOC, you would appreciate that the replacement cost is something which is already added in the warranty price. So essentially, it does not remain an FOC item. The charge of it is already collected in the warranty claim.
Mhm. Okay. We have a question from Mr. Rajiv. When we are checking out supplier invoices, we are getting some rate difference in their invoices, and we are asking the credit notes from the supplier. The date of supply will be 60 or 90 days before. What is the law saying for issuing credit note for such cases? 14 days from the supply or from the date of payment of that supply? What should be the date of credit notes? I think
Yeah, 14 days from the date of change of consideration.
okay,
So date of change of consideration is a valid instance for raising a tax credit note.
perfect. Uh, we have some thank you notes, and then we have another question from Mr. Rao Sanawarali. If an import is shown in FTA pre-populated area and due to any reason, business is unable to obtain the customs declaration with regard to that input,
Yeah.
should the business claim VAT on RCM?
Yeah, absolutely. So again, as I said, insertion of that specific provision in the UAVT decree law reinstates the importance of having bill of entry and the import declaration by the importer in order to recover input VAT. So yes, I think that is an essential document for the recovery of input VAT. In the absence of the same, you may take a view not to recover input VAT.
Mhm. Another question from Millennium Airport Hotel, Dubai. Splitting the invoice which have been paid by us to FTA is allowed?
Not clear with the question.
I think now we have all thank you notes. I think we are done with the questions. Thank you everyone for your time. It was we hope that you found this session useful, and in case you have any more questions, we'll be happy to address you. You can write to us, you can call us, so we'll be happy to answer. Yeah. Thank you. Thanks, Mridul. Thanks, Megha. Thank you everyone for your time.
Thank you, Shailesh.
Have a
Thanks,
nice
Velu.
day.
Thank you.
Thank you all.